In this video, traders, we're going to look at the one important thing you should look at when considering whether to use a new setup or not in your trading. Stay tuned. Hey guys, warm welcome to you. Alright, so when you're scanning for a new setup, and that's either you're kind of watching some videos, maybe you're reading some books, maybe you're doing your own analysis. I think they're all valid ways of finding setups. You know, sometimes I'll read a book and I'll think that's a really good setup. How can I make it my own? How can I adjust it? Does it fit in my strategy? Other times I'll look at a setup and go, that's nothing like what I want to get involved in. Same thing with videos, same things with books, same things with watching the screen itself. You know, it's go, oh, actually, there's a setup there. Let me see if I can digest that and work it out. So one of the things we look at when we're trying to do a setup is we automatically do this, guys. We're traders. It's the way it is. We want to look at the times it's winning. We're always there. We're like, yeah, that would have worked then. Yeah, it would have worked then. It would have worked then, right? And we get all excited by it. But really, the key is to look at when it's going to stop you out and what sort of stop you're going to take. You know, for an example, guys, if we were trading a classical head and shoulders, not to say we should or we shouldn't, but just as a good example here, because we all know what that is. The idea is that you're selling short as you break the neckline, and your stop is probably going to be above the shoulder or above the head. So for example, if we were using that, we'd say, okay, what sort of stop are we taking? Is that manageable? What are we doing? Well, if we're extrapolating out the head down here, the risk doesn't look too bad. Okay, that makes sense. Other times you're looking at stuff where the stop, other times it stops you out, is too much. You know, the trade just doesn't work. You know, there was another setup I was looking at the other day where they were using a stop that was always under like a daily low, breaking out to new highs. I was like, well, that's a lot, because yes, the probability of you getting that, it was kind of looked a little bit like this. If you can imagine, there's you've done this in the day and you're pushing up. It was buying like at highs. I can't remember what the trigger was, but it was buying at highs and having a stop down here. Now, you know, the chance of getting stopped out are low, but when you do, you're going to get hammered, because if it's already moved, let's say 300 points or 300 pips, and you're buying up there, maybe there is a high probability of getting an extra kind of 50 out of it. But the time it reverses on you is the time that you get a 300-point hit, or it doesn't have to reverse. I mean, if you could be sitting there, could come back to a midpoint, and you end up having to close it in the day or carrying it to the next day. It just doesn't seem like a good trade to me. And the fact that, you know, it looked very good on paper is like, oh well, yeah, actually getting that. When it doesn't work, it undoes it all. It's like the classical one that we see quite a lot. I've done a video about this before. Those of you who have subscribed have probably seen it. The social channels, the social channels as in the copy type trades, the social copying. You know, they have these great looking strategies, they look fantastic, but ultimately they're just martingaling in to try and trade mean reversion. They're adding to the position, adding to the position, adding to the position, adding to the position on small size, and eventually it comes back. But the time it doesn't is the time they're just going to get the faces clean ripped off. I know that's an extreme example. No one could be selling options. You know, sell options, you're going to make money statistically most of the time. The one time you don't is the time it doesn't work. So whilst that might not be something that you're interested in terms of options, etc., just be mindful when you're looking at a setup. If it's a technical setup, a chart pattern, where's the stop? Where's the sensible place for the stop? And how damaging is it if I get stopped? Because very often you will find a setup that looks really nice, it looks really clean, but you just can't put a decent stop in. There's a lot of noise in it. You know, like very often you get those kind of rounding bottom type things. I've talked about those before. No, I'm not a big fan of those, because again, you've got to have a kind of reasonably wide stop. There's a lot of noise with it. You know, there's some setups that really just need that wider stop, or a stop that's just not really suitable for the trade. So that's the soak test, guys. That's the one important thing to be doing. When you've got your setup, where is the stop? Don't get seduced by the winners. We all do. We're traders. We see that. We go, oh, that would have been another grand. That would have been this. That would have been that. Whatever level. Doesn't matter. You know, the point is stop. Go, right, okay, that's good, but where would I have to say I'm out wrong if I'm out? Is there a reasonable place to do it? And often, you know, you can find a reasonable place to put a stop that makes sense, and maybe it's not quite as good as the really wide one, but it does the job. It still gets a profitable strategy over time. But sometimes it's just not, and you go, listen, there's nowhere to really work a stop off. It's quite a noisy trade. Sometimes it flings me in and out. The other one is the one we talk about, a spike during Fed. You know, you can fade Fed, and majority of the time it's for the last Fed moves and the last ECB, etc., all these interest rate announcements, you're going to get a spike up, a spike down, back to the middle. And you'll kind of it looks like it's really, really profitable. But the time it doesn't, if you haven't got some kind of way to measure that, you're just going to get, you know, hammered when something surprise happens if you're just taking it without any thought. So just be careful of that, guys. Keep an eye out for the time and the place to put the stop, the distance of the stop, and the effectiveness of the trade should come after you've checked where it's most vulnerable. All right, guys, take care. See you next one. Bye-bye.